Welcome to Explain the Charts, where we break down the latest market movements with a focus on technical analysis. Today, September 18th, 2024, we're diving into the USDCHF, exploring the US dollar's performance against the Swiss franc. We'll start by examining recent news and events impacting the currency pair, analyzing headlines surrounding the Federal Reserve's rate cut and the Swiss National Bank's decisions. The recent Fed decision to lower interest rates by 50 basis points has weakened the US dollar, as it suggests a less aggressive stance on tackling inflation. However, the Fed's affirmation of its data-dependent approach indicates that further rate cuts are contingent on economic data, creating a sense of uncertainty in the market. On the other hand, the Swiss National Bank, SNB, has already begun its easing cycle, lowering interest rates earlier than other major central banks, citing falling inflation. This suggests a potential divergence in monetary policy between the two central banks, which could influence the USDCHF pair. Furthermore, the Swiss economy has a strong export sector, heavily reliant on its neighboring European Union, making it susceptible to economic fluctuations within the EU. This interdependence could also play a role in the USDCHF dynamics, as the Swiss franc might strengthen if the EU economy weakens. Now, let's move on to the charts and see how these news events are reflected in the price action. Looking at the daily chart, we can see that the USDCHF has been on a downtrend since early August, consistently breaking lower than previous support levels. This downtrend is further reinforced by the break below the 0.8540 resistance level, which has acted as a significant barrier in the past. The current rate of USDCHF is 0.84612 Swiss francs, having decreased by -0.01% in the past 24 hours. The decline below the 0.8430 mark suggests a continuation of the bearish momentum, but we need to watch for any potential reversals or support levels that might emerge. The year-to-date YTD low of 0.8373 could serve as a crucial support level, and if the USDCHF breaks below this mark, it could signal a larger downtrend resumption. Shifting to the 1-hour chart, we can see a more granular view of the recent price action. The chart shows a series of lower highs and lower lows, confirming the bearish trend. However, there's a slight rebound post-Fed decision, indicating potential short-term bottoming. But the buyers are struggling to elevate the rate significantly, suggesting that the bears are still in control. The recent trading range between 0.8400 and 0.8540 might provide some insights into the short-term outlook, and any breakout from this range could signal a change in direction. Now, let's zoom in on the 15-minute timeframe to examine the recent volatility and candlestick patterns. This timeframe provides a more detailed view of the short-term fluctuations in the USDCHF. The chart shows a series of doji candlesticks, indicating indecision and hesitation among buyers and sellers. This suggests a consolidation phase, where the USDCHF is trying to find its footing. However, the overall bias remains bearish, as the recent price action is still below the 0.8470 mark, which could act as a short-term resistance level. Any decisive break above this level could indicate a potential reversal, but we need to see a sustained move to confirm a bullish trend. Based on our analysis of the news and the charts, the USDCHF is currently facing a bearish outlook in the short term, with a potential continuation of the downtrend. The recent Fed rate cut has put downward pressure on the US dollar, and the Swiss franc seems to be gaining strength, fueled by the SNB's early easing cycle. The daily chart shows a clear downtrend, with the break below the 0.8430 mark reinforcing the bearish momentum. The 1-hour chart also confirms the downtrend, with the recent rebound post-Fed decision failing to sustain a bullish move. The 15-minute chart shows a consolidation phase, but the overall bias remains bearish, as the price action is still below the short-term resistance level of 0.8470. Key price levels to watch include the YTD low of 0.8373, which could act as a crucial support level. A break below this mark could signal a larger downtrend resumption. Conversely, a decisive break above the 0.8470 resistance level on the 15-minute chart could indicate a potential short-term reversal. However, a sustained move above the 0.8540 resistance level on the daily chart would be necessary to confirm a bullish trend. In conclusion, the USDCHF is currently facing a bearish outlook, but the market is volatile and unpredictable. We need to closely monitor the news events, central bank decisions, and economic data releases to gauge any potential shifts in the market sentiment. Furthermore, keeping an eye on the key price levels, support and resistance areas, and candlestick patterns will be crucial in navigating the short-term volatility and making informed trading decisions. Stay tuned for more in-depth analysis on the USDCHF and other currency pairs in future videos on Explain the Charts. Remember, this is just technical analysis and should not be considered financial advice. Do your own research and always consult with a qualified financial advisor before making any trading decisions.